Hey traders, Mike Sir here. Welcome back to part 3 of the 4-part video series where I teach you how to make money from trading cryptocurrencies. In part 1, I introduced you to the world of derivative trading and the various types of crypto derivatives that you can trade. In part 2, I showed you how to trade Bitcoin futures contracts and a simple trading strategy. If you haven't watched part 1 or part 2 yet, please watch those 2 videos first, as it will give you a good overall understanding of how these trading instruments work. So in part 3, I'm going to show you how to make money with Bitcoin options. Now this is also another extremely powerful crypto trading instrument. So let's get started. As I mentioned in part 1, Bitcoin option contracts are agreements between two parties to facilitate a potential transaction involving Bitcoin at a preset price and date. Now the major difference from futures contracts is that option contracts give traders the option but not the obligation to buy or sell Bitcoin at a defined future price and date. So in simple terms, the buyer of a Bitcoin option contracts pays a premium to buy the right but not the obligation to buy or sell Bitcoin at a predefined price and by a predefined date. Basically, the buyer can choose to not exercise the right if the Bitcoin price is not in his or her favor. Before I share an example of how Bitcoin options work, let me teach you some basics of trading options. Now, first of all, as discussed in part 2, Bitcoin option contracts can also be used like futures contracts for hedging purposes as well as for speculation purposes. Secondly, let me share with you 2 types of Bitcoin option contracts that you can buy. The first one is called call options. Now, if you believe that the price of Bitcoin will go up and specifically above a set price that you have chosen, known as the strike price, on or before the date of expiry, then you would buy a call option on Bitcoin. Now, if your analysis is correct, then you would exercise the Bitcoin option contract at the expiry date, which would give you the right to buy Bitcoin at a lower price than the market price, thus making you a profit. However, if your analysis is wrong, by the expiration date, you will let your option contract expire worthless and lose the premium that you paid to enter the trade. The second type of option contracts are called put options. Now, if you believe that the price of Bitcoin will go down and specifically below a set price, known as the strike price, on or before the date of expiration, then you would buy a put option on Bitcoin. If your analysis is correct, then you will exercise the put option contract at the expiry date, which would give you the right to sell Bitcoin at a higher price than the market price, thus making you a profit based on the difference. However, if you're wrong and the price of Bitcoin rises in value, then you would let the contract expire and only lose the premium that you paid. Now that I've explained the basics of Bitcoin option contracts, let me give you a simple example. Let's say today in March 2022, when current Bitcoin prices are around $40,000, and you believe that the price of Bitcoin will rise in value to $60,000 by the end of June 2022, and you want to profit based on this belief. So what you want to do in this case is enter into agreement today to buy 1 Bitcoin call option contract with a strike price close to $40,000, which has an expiration date of the last Friday of June 2022. So in this case, you pay a premium of $5,298 USD. Now, due to the volatility of Bitcoin prices, premiums can be quite expensive, so take that into account when you determine the options pricing. If the Bitcoin price rises in value to $60,000 by the end of June 2022, then you'll be able to buy Bitcoin below market value at $40,000 and thus profit from this contract. In this case, the option contract is settled for $20,000 USD per Bitcoin that you own. And if you deduct the premium that you paid, which is $5,298, then your profit will be $14,702. So in this case, you risk $5,298 in premiums to make $14,702, which is a risk reward of 2.77, or you made 277% return on your premiums paid. Now keep in mind that if the Bitcoin price doesn't stay above $40,000 by the end of June 2022, then your call option contract will expire worthless and you will lose all your premiums. So you should only be comfortable risking whatever premium amount that you're comfortable with. So in this case, one Bitcoin option contract is $5,298 in premiums. Now if that is too much, you can buy 0.1 call option contract, which would cost you $529 in premiums, or you can buy as low as 0.001 option contract, which would only cost you $5.29 in premiums. So basically you want to determine the risk that you're comfortable with before you buy a call option contract. Now let me show you an example on how you can profit when Bitcoin prices go down in value. So let's say today in March 2022, when again Bitcoin prices are around $40,000, you believe that the price of Bitcoin will fall in value to $20,000 by the end of June 2022, and you want to profit based on this belief. Well, what you want to do in this case is enter into agreement today to buy one Bitcoin put option contract with a strike price close to $40,000, which has an expiration date of the last Friday of June 2022. So in this case, you would pay a premium of around $5,968 USD. Now, if the Bitcoin price falls in value to $20,000 by the end of June 2022, then you'll be able to sell Bitcoin at a higher market value at $40,000 and thus profit from this contract. So in this case, the option is settled for 20,000 USD per one Bitcoin that you own. And if you deduct the premium that you paid, which is $5,968, then your profit is $14,032. In this case, you risk $5,968 in premiums to make $14,032, which is a risk reward of 2.35, or you made 235% return on your premiums paid. And again, please keep in mind that if the Bitcoin price doesn't stay below $40,000, then your put option contracts will expire worthless and you will lose all your premiums. So keep in mind in terms of the risk, and as I said again, you can buy as low as 0.001 put option contract to minimize your risk amount. Before I share more specifics of each Bitcoin options contract, I want to let you guys know that this video series is sponsored by Delta Exchange. Now, they built one of the most liquid and trusted global currency derivative exchanges and are run by the founders who bring expertise across financial markets, derivative trading, product and engineering from companies including Citigroup, UBS, and Hotstar. Now, they're well financed by investors such as AAVE, Coin Fund, and Kyber Network. They have an incredibly comprehensive product offering with more than 100 crypto derivatives to choose from and are number 2 in crypto options trading volume globally. Now, they're currently offering a special promotion for only my viewers. So if you sign up for an account today, you'll receive a 10% discount off any trading fees. In addition, try options trading on the Delta Markets platform and get up to $100 cash back on your first options purchase. Please click on the link in the description box below to sign up for an account and start trading today. Okay, back to the video. Let me answer the most common questions that you guys have about trading Bitcoin option contracts and their specifications. Since you are buying a contract that gives you the right to buy or sell Bitcoin and not the actual Bitcoin itself, you're only required to pay for the premium. And the premiums will vary based on the sentiment of the Bitcoin price. The maturity dates for Bitcoin option contracts can range from daily, weekly, bi-weekly, monthly, bi-monthly, quarterly, bi-quarterly, or even yearly. And typically the most popular are the monthly contracts. Their expiration date is stated on the option contract, and depending on the type of option, the contract typically expires on the last Friday of each period. The trading times for Bitcoin options are the same as Bitcoin futures, from Sunday 6 p.m. Eastern Standard Time to Friday 5 p.m. Eastern Standard Time. And there is a 1-hour break between 5 p.m. Eastern Standard Time till 6 p.m. Eastern Standard Time each day, unlike the actual Bitcoin, which trades 24 hours a day, 7 days a week. Bitcoin option traders will encounter the same two types of trading fees as trading Bitcoin futures, the maker and taker fees. Now, the only difference is the maker and taker fees are the same for options, and you can see a list here of the taker and maker fees for Delta Exchange. As I mentioned about trading Bitcoin derivative contracts, the biggest benefit of trading Bitcoin option contracts is the leverage. Now, this means that you're not taking ownership of Bitcoin itself, but rather speculating on its future market price. The only thing that you're paying for is the premium costs, and they're typically a small percentage of the value of Bitcoin itself. In addition, when you buy a Bitcoin option contract, your profit is potentially unlimited, while your risk is capped at the price of the premium that you paid. Now, the profit for Bitcoin options would obviously depend on how far above or below your strike price the Bitcoin price settles at the expiry date. And this could result in potentially doubling, tripling, or even 10 times the profits that you make versus the premiums that you paid. However, the biggest drawback of buying Bitcoin option contracts is due to the price volatility of the Bitcoin price. Not only can price movements turn a profitable option contract to an unprofitable one in the blink of an eye, but it makes opening a position extremely expensive. And due to the implied price volatility of Bitcoin, buying an option contract can be very expensive. Lastly, as I mentioned before, buying Bitcoin option contracts gives you the right to buy, but not the ownership of Bitcoin. So please keep in mind that if the Bitcoin price doesn't stay above or below your call or put option strike prices by the expiry date, then your call or put option contracts would expire worthless and you will lose all your premiums. So if you're speculating on the Bitcoin price, only risk whatever premiums that you're comfortable risking. Before I share with you the trading strategy and example of how I trade Bitcoin options, please take a moment to like this video, hit that subscribe button if you haven't already, and tap on the notification bell. You'll be alerted when the next video comes out for this 4-part video course series on how to make money from trading cryptocurrencies. In part 2 of the 4-part video series, I talked about a breakout strategy that I use to play Bitcoin futures. Now, you can utilize the same strategy for Bitcoin options. However, I will share with you a simple strategy that I use for trading Bitcoin options. Now, here you can see a chart of the Bitcoin price versus the US dollar. So the simple trading strategy that I like to play with Bitcoin is called trend trading. Now, what I like to do is buy Bitcoin call option contracts when the price is trending up, while I like to buy Bitcoin put option contracts when the price is trending down. Now, with Bitcoin options, you don't need to be as accurate on the entry price, but you do need to ensure that you are trading in the same direction as the price trend of Bitcoin. So here you can see that I drew 2 trend lines for Bitcoin. One is on a downward trend line when it broke its downtrend, and now it's on the uptrend. So therefore, what you want to do right now is focus on buying only call option contracts where you believe that the Bitcoin price will go higher. So here you can see that I drew an uptrend line, and what you want to do here is look to buy Bitcoin call options once it touches the uptrend line. So you can see right now that the Bitcoin price is right at the uptrend support trend line. So you should be looking to buy Bitcoin call option contracts. So here you can see that the current Bitcoin price right now is around $38,630. So what I'll be looking to do is buy call option contracts near that price, and the closest is the strike price of $40,000. In this case, call option contracts with an expiration date of April 29th, 2022 will cost me $2,033 per one Bitcoin contract. Now I'm going to buy a call option contract with a shorter term of less than 2 months before expiration because the Bitcoin price is right at a price support level right now. Now, if it holds support here, then we'll go higher and I'll make money. If it breaks below price support, then the uptrend is over and I will lose money on the trade. Now, the further the expiration date, the more expensive the premiums can get. So there's no point in buying too far out if you know that the price is either going to go up or down at this key price support level. So if the price does go up from this key price support level and goes higher, then I make money. So for example, if the price of Bitcoin does reach $50,000 by the end of April 2022, I would profit by $10,000 per Bitcoin. And if you deduct the premium that I paid, which is $2,033, then my profit will be $7,967. So in this case, I risked $2,033 in premiums to make $7,967, which is a risk reward of 3.91, or I made 391% return on the premiums that I paid. And this is the power of trading Bitcoin options contracts. Thanks for watching part 3 of the 4-part video series of how to make money trading cryptocurrencies. Part 4 will be released next week, and please make sure that you hit the subscribe button and notification bell so you'll be alerted when the next video will be released. I'll see you all in the next video.